Londra'dan herkese merhaba. Londra-İstanbul hattında piyasalara özel bir parantez açıyoruz. Yıl sonu değerlendirmelerine devam ediyoruz. Bugün stüdyomuzda çok değerli bir konuğum var. Mike Harris ile birlikteyiz. Kendisi Cribstone Strategic Macro'nun kurucusu, Stratejist Mike. Hi, welcome to our London studio.
Thanks for having me.
Actually, first of all, how would you assess 2025 in terms of global economy and financial markets? And if you were to draw up a balance sheet, what stands out most?
Well, clearly, the power of the equity markets and the narrative that tariffs and Liberation Day was going to be totally disruptive, that obviously didn't happen. I think we started the year, people not realizing how bad tariffs would be. And then what we also, I think a lot of people didn't appreciate is, and what it seems that the Trump administration has actually gotten right, is investment happen. When the U.S. says you have to pay a premium to play here, companies respond to that. It's a big enough pool that it doesn't get negatively impacted from a growth perspective. It leads to a redeployment of capital, which is not great globally because it means some capital is being left redundant and you're getting lower returns. But on balance, it's driving some investment into the U.S. So it hasn't been growth negative. It is, though, from a global perspective, return on capital negative. Longer term, one thing the markets are not talking about, because the markets are shorter term, this is going to make the U.S. a lot less competitive over the course of a generation. You grow up under protection, you lose competitiveness undoubtedly. So the markets are always shorter term, and that's one of the reasons why we're seeing such resilience. And the AI trade as well, I think, is important that people need to understand. All the investment is front-loaded. When we did the internet, when we did the car, basically what happened is, okay, you have this transformational technology, but something constantly has to be manufactured. Everyone had to buy computers and smartphones. Everyone had to buy cars. Well, no, I think that the issue is it's all front-loaded. So all the investment is happening now in energy and data centers, but the actual investment, once people are using AI, doesn't exist. It's just productivity improving. So on balance, this is not a long-term job-creating growth machine. It's happening now. It's front-loaded. So I think we're not going to get a negative read-through because those data centers will be used, that electricity will be used, but the question is the monetization. So this is very, very different from previous investment bubbles because usually when you build too much electricity capacity or cement capacity in Turkey, what happens? You see the price of the actual electricity or cement fall quite quickly when the overcapacity happens. Here we're not getting overcapacity because that electricity in those data centers are going to be used. So the likelihood of an economic signal that tells us the markets are wrong as we head into 2026 is quite low. If we're going to get a signal, it's probably, I think, going to be more likely a policy signal, or perhaps the idea that AI works so quickly, we get such extensive loss of job growth and higher unemployment that's productivity driven and not growth driven, that we actually see recessionary consequences sooner than people expect from all this investment in AI. I still don't think that's a 2026 story. But it is something I think the markets aren't aware enough or thinking enough about.
So that's a big risk, actually.
I think so. When everyone's behaving the same way and saying, I don't need to hire as aggressively, I can now actually, this AI doesn't actually work unless it substantially improves productivity. So the risk here is, of course, that everyone at the same time is laying people off. And when that happens, you end up getting, okay, you have more productive, more profitable companies, but you get the recessionary reflux associated with the job market. And that maybe we start to see signs of that in 2026.
So that's a big risk, actually, but not the risk of 2026.
Yeah, I think that hopefully this won't be the risk of 2026, but I think the biggest risk is the Fed. And the reason I say that is right now, Trump 2024 only has control of one permanent member of the Fed. He already has that one. That one expires in January. So his new Fed chair has to replace the existing guy. So he only has one of the seven. The Supreme Court in January is going to rule whether Trump is allowed to fire Fed Governor Lisa Cook. If he can fire her, that's two that he gets. But it also means he's going to fire Jay Powell. And people say, no, he's not going to fire Jay Powell. Jay Powell's term expires soon. But his term as chair expires in May. But his term as governor expires in January of 2028.
So he might continue as a governor.
I think it would be irresponsible and unpatriotic for Powell to step back because he knows the independence of the Fed is under threat. So I think he will dig his heels in and he'll stay. So
that's an important issue.
But then also once you set the pattern that Trump is allowed to replace people, if the Supreme Court allows him to replace Lisa Cook, the justification is very, very, it's not non-existent, but it's the bar is very low. Mm-hmm. So he will have the capacity to perhaps pack the Fed within the course of 2026. So you must, the biggest event is what the Supreme Court rules associated with the ability to fire Lisa Cook.
Okay, January will be a critical month.
January we'll hear the argument, so we'll get a sense of what they're thinking, and then we might not get the ruling as late as June, but it'll probably happen in March.
Mike, you know that what I wonder most is about Turkey, your point of view about Turkey. I know that you're covering Turkey like 30 years or something.
Since 32. Yeah.
32 years. You are covering and looking Turkish markets. So you know Turkey better than us, I guess.
Estağfurullah.
You know also Turkish words.
Yes.
Okay. But I will continue in English, of course. So in this big picture and in this emerging markets universe, what is the place of Turkey?
Well, Turkey's sort of uncorrelated because there's not a lot of foreign money. So Turkey can beat to its own drum. Mm-hmm. And that often can be a good thing, but it can still be quite a negative thing because I think what matters more is what domestic investors think about where Turkey's headed. And you see that in periods when we had, obviously the low interest rates and the dollarization. Are domestic deposits sticky is always the question you need to ask. And right now people are being paid enough to stay in Turkish lira. But I think the question is ultimately, we saw with the politics, and the cost of capital in Turkey has risen because of the political trajectory. We saw that in March. It wasn't just foreign money, the hot money that had come in quickly and left. There's a jitteriness, a nervousness, and it's negatively impacting the willingness to invest until there's clarity where Turkey is headed over the medium term. And this, irrespective of the strength of the central bank and the disinflation program and the fiscal, Turkey's cost of capital is higher, and it's going to be higher until we have some degree of political equilibrium, which we absolutely do not have right now, because everyone's questioning, okay, do elections matter? What's going to happen before? We've seen, if you're arresting your opponents, it obviously changes the sense of normalcy of the political transition process. And that, I think, is something that will continue to weigh on Turkey. But we still are now in a disinflationary period where interest rates have scope to fall, I think, as much as 800 further basis points from here. So 2026, all things considered, Turkey will have its own self-help story with strong interest rate reductions. And as long as the politics don't get in the way while those interest rates are falling, I think there's a pretty strong argument that both domestic depositors will move more money into equities, and foreign funds that are paying attention to Turkey will respond to that momentum and also enter the market in the first half of 2026.
So it's so interesting. We're always trying to understand the point of view of the foreign investors. But as foreign investors, you're looking at the domestic investors.
I think the emerging European investors are, because they're always in Turkey. They're always paying attention. There are plenty of people that have been looking at Turkey as long as I have that are managing money. I'm an advisor. And they will respond to domestic movements because Turkey's a big part of their benchmark. Mm-hmm. Global emerging market funds, Turkey is 0.6% of the benchmark. Most of them have had nothing in Turkey for a number of years. The only positive right now is because when you go from nothing to one stock for a global emerging market fund, these can be large positions. That can be quite positive. That was starting to happen until Imamoglu was arrested, and then you saw the response to the protest and everyone realizing, Turkey's not moving in a clear one-way direction like I thought it was at the beginning of 2025 is what I think a lot of those investors were thinking. But they're still doing work. They're modeling companies, and they're thinking, what stock can I buy in Turkey? Mm-hmm. One, maybe two, but probably just one that I can hold even if Turkey wobbles again. That I'm comfortable that it's a resilient business. It'll allow me to have a position in Turkey, because before they were very comfortable having nothing in Turkey because of the interest rates were here and inflation was here. So it was too easy for them to say, I don't want to even look at Turkey. Okay. Now, though, the fixed income market's working. We're going to have rate cuts. Disinflation is happening. The macro looks more credible. Mm-hmm. So on balance, it's tougher for them to say, I have nothing in Turkey. They should probably have a strong view as to why they don't have one stock. And if that one stock is comes up through an IPO or through a secondary block, then it makes it easy. They can make a decision with and get a big piece of stock.
So I will ask in another way.
Yes.
I get some answer, but do you think that is this a wait and see period for foreign investors, or they are willing to invest for Turkey in 2026? How would you describe the overall positioning of foreign investors?
Well, I think the position for global emerging market funds is they basically have zero in Turkey, most of them. And so positioning is a positive for Turkey. So if people already had one or two stocks in Turkey, the outlook for foreign funds going into Turkey would be totally dependent upon momentum, not like in India or something like that where people are constantly looking for new good stories. People aren't that enthusiastic about Turkey because they sense now with these protests that we've seen this year, this lack of political equilibrium. Yes, geopolitics is better now. Yes, the direction of the macro is a lot better. But on balance, the protest was a wake-up call for a lot of foreign investors to say, oh, there's something not quite right in Turkey. And so a lot of them, I think, will be hesitant to be meaningfully overweight, which means more than one stock. So I think we go from zero to one stock. I really doubt you're going to see people chasing more stocks. So once they've positioned with the one stock, they're probably going to look to other markets. Whereas in more exciting countries where people really believe in the long-term outlook, and Turkey should be a country like that, but it's not, unfortunately, then they're always looking to add. Because they say this is a growth economy, new companies are going to come to the market. But on balance, I think people feel like this is I wouldn't call it just a cyclical opportunity because Turkey has recalibrated versus, for want of a better word, the absurdity of policy from the 2018 period to 2023. But there's relatively low conviction that Turkey's a long-term structural winner now because of the worries about the lack of political equilibrium.
So do you call this period as a wait and see period?
No, because having zero means they're actively taking the view that they don't want to be in Turkey, and I think they're less comfortable with that now. They think enough is going right in Turkey that I should probably have one stock. So the opportunity now is driven by positioning. People are underweight, and they're probably going to move to neutral. And I think that can still be quite powerful for some individual stocks that end up being winners from that process of attracting foreign investment.
So if I didn't get it wrong, you said that there is a room for rate cuts 800.
As much as 800. I think, one thing that people didn't, the last 2 months, inflation was better than the market expected. And everyone's still so quite cautious and, doubting the numbers, this and that. We annualized, if you look at October, 2.55%. Sounds like a high number. But from 2005 to 2020, the October was 20% of full year inflation. So if we use that same ratio, 1/5 of full year inflation, October was annualizing at below 13%. November again, annualized below 13% if we use 2005 to 2020 seasonality, purposely taking out COVID basically. So I feel quite strongly that the disinflation has been happening because they've moved to disinflationary wages. Most people only got a 30% wage increase in January of this year. That's already been eaten up by inflation. So purchasing power is weak. Where can inflation and pricing power come from if consumers don't have the funding? So I think the market is too negative on the inflation outlook because they saw the overshoot up until we got to the end of the year. But these last few months, and I think December will be the same, are implying that the disinflationary momentum is quite strong.
And last question for 2026. What is the first and foremost thing that you will follow, both for Turkey and for global markets?
Well, for global markets, I think it's the Supreme Court ruling on the Fed. I think that's hugely important because we've seen what happened when a central bank is hijacked and just does whatever the politician wants. That's not good. And Trump is very, very rude to the central bank, and he's very adamant that interest rates have to fall. It'll be tough for him to back away from that. So if the Supreme Court allows him to fire people, we have a problem. And I say we as in global markets. For Turkey, I think, obviously the minimum wage and inflation trajectory, if this is the time to anchor it. And, it would be nice if wages were not so universal. For too many years now, every barber and every restaurant knows exactly how much the wages of their customers have gone up. That's a weird situation. So because we have a quasi-national wage policy in Turkey. So it'd be much better to not raise the minimum wage as much, but provide more direct subsidies. Subsidies for people with kids, subsidy for people at certain ages, subsidies in certain income levels. Really go after the hunger threshold as opposed to saying we're just going to raise everything through wages, because then it gets inflated away. So even if you raise the minimum wage to surpass the hunger threshold now, it'll be inflationary again, and we're going to get stuck there again in 12 months' time. So I'd much rather see a conservative minimum wage hike, which I know sounds stingy and mean, but the way you make up for it is put it on the fiscal. Make sure that there is subsidies that are targeted for the people that need it. Then we don't have universal inflation just because of wage hikes.
But at the time of this interview, we don't know the minimum wage yet.
Yeah.
But hopefully we'll know in a few
And
days.
hope, if it's more than 25, I think then the disinflation story will be problematic. 25 is okay-ish, but it probably means that people won't have super high conviction that 27 inflation will be a lot lower, because when the political cycle, I think everyone will probably say, oh, that's going to be a year when the minimum wage will go up as much as trailing inflation, if not more. So we might start to see a belief that we'll see inflation in the teens disappear if they're too aggressive with the wage hikes now.
Mike Harris, thanks for joining our program.
Thank you for having me.
Cribstone Strategic Macro kurucusu Mike Harris ile buluştuk Londra stüdyomuzda. Sözü İstanbul'a bırakalım.